Okay, welcome. Today we're going to be talking about AMD. Specifically, how could we have traded AMD today on a day that it's up 5-6%? Yesterday it was up another 5-6%, as we can see right here. We're also going to cover how we could have traded yesterday as well on the 5-minute chart. And today we're going to be using the stochastics oscillator, as well as the CCI, which is the commodity channel index. We're using the default 20 period, and then on stochastics we're using 14, 3, and 3. On TradingView, by default, it'll be 1 for the last number at first. I like to change it to 3. It gives less false signals. So let's get right into it. I'm gonna make sure that I'm staying objective in this video, so stick around, and I promise you I'm not wasting your time like a lot of the other people on YouTube, so let's get at it. First off, I wanted to first note that if you try to trade this just off of price action, you're probably not going to do the best. We need more proof, right? We need more ways to verify our actions rather than just trading off of price alone. And so that's the note I made right here. So read what that says, and notice if you were to try to trade this supposed flag and pennant breakout, right, that we're seeing right here, if this is the flag and this is the pennant, you would have gotten in right here on this green bar right there where the crosshairs are lining up, and you would have got probably stopped out. I don't know how tight your stop losses are, but I mean, we're talking tiny gains from here to here if you were to get the entire move in, and it's not much. So, how can we trade better than this, right? How can we trade better? First thing I want to say is set rules, and I think that that's going to be what distinguishes you and I from the other retail traders. So let's look. The best breakout of the day was this right here. How could we have traded this? We're going to use the stochastics, volume, and the CCI to confirm our trade, as well as price action breakout. That's 4 signals right there, and we're getting in, and we're getting. You would get a pretty good entry on this because there's literally 4 signals. So let's talk about how we could have done that. First off, if you watch any of my other videos, or if you have a chance to watch Eric Muade on YouTube. Muade is spelled M-U-A-T-H-E. I'll put a link in the description, but he talks a lot about how to draw RSI trend lines, and so I'm going to apply some of that stuff to what I'm about to show you on the CCI down here. You can also learn about RSI or trend line drawing from other people on YouTube. It's also in technical analysis Bible books, the whole ordeal. So let's get right into it with the CCI here. Assuming that you know a thing or two, we're going to try to draw trend lines on the CCI. I want to first note that trend lines, when we're drawing on here, don't have to be from the top of the peak. They don't have to be. We're really extended right here from that bull flag that we just got. We're going to ignore that. I'm going to say that for right now, those major bull flags, we're going to ignore them. Instead, we're going to trade all reasonable trend line peaks that we can. For example, this is a reasonable. I can look at this, right away, and I can see a trend line going on right here, and then I can look at the chart and I can see, we did break out right there. What I'm seeing is really what I'm believing. So assuming that I'm going to draw a simple trend line here connecting peaks. There's 3 peaks right there, another peak right there, and then we come and test that line again. And I think the more it pulls away from this trend line, the more significant it is. And I say that for a reason. When you have these little micro plays in the mix like this right here, let's say you were trying to apply the same logic. I was saying, oh, Brandon, I see a trend line right here, with these 3 peaks, and no way, dude. Absolutely not, because we're not pulling away from that trend line, and plus it's only 2 points of contact. So again, 3 points of contact. The more you pull away from the trend line, the more meaningful this trend line might be. Because if you're drawing this in real time, let's look at it. If you're drawing this in real time, you start to see it come up like that, and then it breaks that line. You could have seen that, and you saw that it pulled away quite a bit. So that's a meaningful signal. So we have a trend line break. We can trade that. If you want to be a little bit more reserved because, you're a smart trader, you can also wait until, I have a trend line break here, and I just crossed above 0 on the CCI. you know, how aggressive of a trader do you want to be? And so you have level 1 and level 2 here, right? So let's even go ahead and mark that out here. We got a level 1 entry. How aggressive are you, right? Are you an aggressive trader? If so, that's maybe what you're looking for. If your risk tolerance is higher, then great. So if we look at this, we have a crossing of the 50 line right here, right? Let's go ahead and draw that for you guys. Like I said, I'm not wasting your time. Stick with me. The channel crossing 50 here is a secondary entry. If we look at the stochastics as well, right? They say the stochastics, this is oversold, this is overbought, and the stochastic crosses above 20. I don't buy crosses down. When it crosses right here, the orange crossing the blue, I wouldn't buy that. Why? Because, listen to my words carefully, when you're looking at the stochastic oscillator, crosses in the oversold territory during a downtrend are ignored. And in uptrends, the overbought crosses are ignored. Why do we say that? Well, if you know anything about stochastic oscillators, I'll just prove it real quick. From here, if we line up my crosshairs, from here to this cross right here, you would have gotten out on this simple cross right there, when in reality, it stayed above, overbought the entire time, this entire move. So instead, I like to think about stochastics as really when it crosses the 20 line. I use stochastics just as a loose confirmation, or stochastics can give a lot of false signals. So I'm going to be very conservative with them and use the 20 line. Even then, they can give you false signals. So then you could say that's level 1, that's an aggressive trade. Level 2, again, would be at the 50 line for this one. This one's at the 0 line, this one's at the 50 line. So I'll go ahead and mark that as well. So this is strategy number 1. This is how you could have traded them. Strategy number 1 to get in for this massive run right here, right? Because say what you will, there was a bull flag here, but according to this, there were signs. There's an entry here and an entry here. And we had decent volume, coming in through here. So say what you will, say that you don't like this, and that's fine. Let's go ahead and let's fast forward into the day today. And this is where it really gets interesting. Again, we're getting back into the idea of RSI trend lines. So again, I'm going to draw some RSI trend lines. This is such an extended peak right here. I'm not even going to try to mess with it. I'm going to try to mess with what I can. So again, 3 points of contact. Absolutely necessary when we're messing with a CCI. Now I set up here, we can be a little bit looser, right? We can be a little bit more aggressive with our trend lines down here. We keep it through a 3 at minimum. And again, the more it pulls away from the trend line, the more significant it is. So looking at this real time, I could, at this point, I have a point of contact there, and there. So I can draw this lower trend line right there. I'm going to watch for a break. And as you can see, we come back to test that line. I would say this is a pretty significant trend line. If we break this with some volume, that's pretty good. And what do? We don't really break it with volume. I'll agree. But what do the stochastics give us? Well, the stochastics show us that we just had a crossing in the middle range. So it's kind of it's a weaker signal. It's an early entry signal. And by now, somebody could also say that, hey, we're trading in a wedge. So entering here is pretty unrealistic. If we line up my crosshairs, it's right here. You really have no business to be entering the trade on the first green bar that we see right here. So that's a super aggressive trade. Where is the reasonable entry at? Right around in here, I'd say. And how do we see that? Well, as we can see, we saw rejection right here on the stochastics, which is this bar right here. And we've clearly formed some sort of wedge, this is really my favorite price breakout pattern, to be honest with you. A simple downtrend like this, and then we break above it. I think it works more often than not for me. So we have a pattern here, and then I'm looking at my stochastics. We have pattern breakout with decent volume. As you can see, we have volume green bars above the 10-day moving average. sorry, 10 period moving average. On the stochastics, we're crossing above resistance right there. See, we failed to break out, so I'm going to draw a resistance line. That's the idea with this. We failed to break out here, so what am I going to do? I'm going to draw a resistance line. Once I cross back above it, that's a buy signal. That's a buy signal. The volume's a buy signal. And what do we know with the CCI? Well, look at this. We're starting to break above this 100 level here. So that's a buy signal. I always say when we're breaking above on the CCI at any 100 level, that's a buy signal. So, okay, to back test what I just said, we cross above 100 right here. That gets you in on this day right here. So if we just apply that going forward, it's a general accepted concept when it's above 100 buy. We can see it again right here. So, you have a buy signal from the CCI textbook definition as well as a trend line. We literally have, I'll move this black line. Look how, so I drew this trend line. How did I draw it? I'm looking at the CCI and I say, okay, so I see this is lining up with these. How can I make this work? I know I can't use this point. Okay, I'm going to use any notches available, right? Any price action notches, because, a picture can has 1,000 words to say about it, and I look at this one and I see these notches all lining up together, and I'm like, you know what? I'll use it as a buy indicator, maybe as the idea of resistance, and that's what I did here. And we break above it, and again, four indicators. Like I hope you follow what I'm trying to say. Like this bar right here is less meaningful than most of the others I've noticed, but nonetheless, I'm just trying to give you an idea of how I'm trading this, of how I'm thinking about this when I'm drawing these trend lines. Because if you can't think in the mindset of how I'm thinking when I'm looking at these, then then I'm just a dude speaking words over here. So I'm trying to teach you how I'm thinking about these, and how you can think like me in order to develop your own strategy. Just the idea of trend lines really can go a far way. And so if we were to buy right here, we get in this massive run here, and if we just use what we just determined as a strategy, you get a 3% move in today. Honestly, if you were to get in at the very open of the day, if you were to somehow get shares, you would have gotten a at most perfect trade, 6%. So, I just got you half of the move in for the day, after the chart's already extended, and I think that, I think that's pretty good. We got 4 buy indicators, right? So, that's the thing. Anyways, I hope this was helpful. I just want to point out, for those of you that are still here, which I'm sure there's very few of you, let's look at yesterday's price action. How can we learn from yesterday's price action? So real quick, I'll go ahead and I'll get rid of this, ignoring this 33 that we have in here. Let's go ahead and take a look at how can I trade this. If you ever heard of the gap and go strategy, it's where you buy the first green bar after a red bar on a bull flag, or after you gap up, I should say. We gap up here, we look for the first red bar, buy the first green bar afterwards, and you get a tiny run in here. Again, it's not meaningful. We're trading off of price action alone. So if we draw this trend line right here, connecting the idea of a price action breakout, it's an okay signal, I guess. We break out on this bar right here, and then we back test it a few times, you could say. Depending on how you want to draw this line, you can draw it like this. How about that? This is probably a better representation, and I do think it's important to always note your angles when you're dealing with trend lines like this. If you got a super aggressive one, over probably, I'd say 40, you should probably, or 45 especially, you should probably reconsider the line. Maybe 50 is more. I like to be conservative. So we have a price action breakout here, and it's a pretty good signal into the day. Let's see, how can the stochastics help us out here? Stochastics definitely gave us an entry, at that breakout level. Volume's not really confirming there, though. I guess you have a price action breakout for the most part. You get a small run in. We'll go ahead and measure it for everybody. You get a 1.6% move for the day. So say what you will, there wasn't much to trade yesterday as far as massive runs go at past open. the massive runs happened with gap. So this trend line measure, I tell you, it doesn't work too well. I mean, maybe it does, but it changes up all the time. Anyways, if we start to look at how we can trade this, let's start to use the idea of continuation patterns on the trend line, on the daily price action. There's clearly a trend line, a continuation pattern going on here. Call it a wedge, if you will. But we broke out here. Now we have a wedge, and how can we see that in stochastics? So I mean, look at it. So stochastics got stalled out right here, right? And then we break above this resistance because, you know, it got stalled out. So let's draw a resistance line, and then right here we break above that resistance line, and we get another small, tiny little move in. And for those scalpers out there that are watching this, you know, this is a great way for you to trade this. And I must say, if you're a scalper watching my videos, you should probably reconsider being a scalper, because it sounds like you don't know what you're doing. But but right at this point right here, we get a sell indicator, and you get out of this move right here just using stochastics alone. And again, with the CCI, let's just keep it simple. If you don't have nice trend lines here, then go ahead and just use, you know, the textbook definition for the commodity channel indicator or index, whatever it is, and any breaks above 100 are considered your biased long. That's the way I like to think about it. Your biased long. It doesn't mean you have to buy it. You know, you do what's in your best risk tolerance. I like to get as many buy signals as possible. So you know what? You could say by textbook definition, this is a buy signal, this is a buy signal, and then this is a buy signal for this entry point on that axis right there. And I hope everybody understands why I say this is a buy signal. Looking past, you know, this continuation pattern here and this breakout here, you know, this would get you in for the whole move. If you want to get another signal, and this gets you in for another move. We even got another signal for another continuation pattern. This little guy right there, you know, shows consolidation before another small little run. Where's our exit point? Our exit signals right here, when we're breaking the stochastics at the 80 level, and CCI gave you a little bit earlier of an indicator by crossing below the 100. I also like to think any crosses on the CCI below 50, you're biased short, or you know, you're bearish, I should say. I don't short sell, so don't think that I do. But you know, depending on, I like my indicators to bias me certain ways, so I encourage you to think in that strategy. So you know, yesterday's price action wasn't near as interesting, but I hope that gives you a better idea of how you can use you know, a trading system like this. And I hope that this was helpful for you. And if you have any questions or any comments, please feel free to leave them. If you would like to see more videos like this, as well as trade reviews, please hit the subscribe button. And if this video was helpful for you, consider, you know, liking the video. So thanks everybody for watching, and there'll be more to come.